Welcome to the Leader's Edge podcast. I'm Sandy Laycox, Editor-in-Chief of Leader's Edge. In this podcast, sponsored by Axis, I talk with Ann Ha, CEO of Axis Re, which is the company's reinsurance arm. We discuss market headwinds and areas of opportunity in property and casualty, how the reinsurance market is working to correct itself, Axis Re's approach to emerging risk, and what it's been like for Ann 1 year into her role. I hope you enjoy our conversation.
Ann, it's so great to have you here with me. I'm very excited for this conversation. You are the CEO of Axis Re, so welcome.
Thank you, Sandy. Great to be here.
I'd love to just get started talking about your role a little bit. You have been in the role for about a year, and I'd love to see your reflections on the past year as well as what you are thinking about going forward.
So we're a year on from the repositioning of ourselves as a focused global specialist reinsurer. And I have to be honest, I'm really proud of what we've achieved. Our strategy is clear. It's aligned with the overall Axis Group strategy, and reinsurance remains a key contributor to the company and a complementary part to the broader specialty portfolio. One of the key highlights was the highly supportive broker and client relationship. Really highlighted how broad and deep the relationships we had across our business in the chosen lines that we remained in. And we worked really hard to keep earning their trust, to be thoughtful solutions providers, not just pushing product. And their partnership and their commitment was very much appreciated and very, very important to what we were able to achieve. Second, I would say our team really led from the front foot. They led with confidence, both offensively and defensively, really focusing on clear, transparent risk appetite, service delivery, really being out there as a quoting market, and really sharing, what we were really looking to achieve and how we could find mutual benefit in doing that together. And our numbers show it. Our Q2 results really highlight some of that meaningful progress. For example, we had a 47% increase in our new business writings in our targeted lines. Wow. We retained 87% of the business we wanted to retain. 4% premium growth if you exclude the exited lines. And we continued to expand our margins, we selectively grew, and we maintained a bottom line profitability focus. So, honestly, I step back and I'm proud. If I think about where we're going, we're committed to advancing our position now as a specialist with a commitment to the lines of specialty, credit, A&H, and casualty. We have a clear strategy really focused on strong cycle management to make sure that we're delivering a balanced portfolio, that bottom line profit focus remains ahead of premium growth targets, and that we're delivering outperformance across the market cycle. There's a lot of headwinds, which we might touch on, and we need to effectively manage those headwinds while at the same time capitalizing on the harder market environment that we're continuing to see over the year and to selectively grow. And then I think it's also for us about enhancing our integrated operating model to continue to drive efficiency and scalability as we move through the cycle. So with this strategy as our foundation, we will really lean into the specialty lines. In the past, with the focus, really on casualty and property, specialty was the area, we didn't lean into as strongly. And we truly believe that's the opportunity to have a more balanced book, but also really aligned to the strategy of the future. We'll take a cautious approach to casualty unless we see further market improvement, particularly in the GL and PL classes. And we will, continue to incrementally enhance and evolve our niche businesses. And for those, we define those as A&H, workers' comp, motor, and our capital risk solutions group. So I think all important as well to note is these things are all great, but we need to continue to invest in our talent and expertise, continue to learn as much as we can from the data and analytics that we capture to better inform our decisions. And as I highlighted, the importance of our broker and client relationships.
Absolutely, absolutely. All great points, and great to see the success of the past year so far as you position yourselves for the future.
Thank you.
Let's dig a little bit deeper into some of these lines that you touched on a little bit. As you mentioned, you've really been strategic in streamlining the reinsurance focus, cutting back on unprofitable lines, leaning into others. As far as the marketplace itself goes, where specifically are you seeing more opportunity? And then where, and you mentioned this a little bit, but where do you see areas of caution, the real need for caution?
Overall, the market, I think, presents, quite a few challenges at the moment, but also opportunities. It's obviously highly dynamic and evolving. The headwinds we face are not specific to us, but specific to our industry and the world in which we operate. Social inflation, economic inflation, rising interest rates. Specifically on the casualty side, the uncertainty around loss costs and concerns around loss reserves on some of the back years. Then if you're in property or some of the other climate exposed lines, the impact of climate change, increase in losses from secondary perils, and obviously increased geopolitical risks around the world. So the way I look at it, it's such a rapidly changing environment, and our clients' needs are evolving at a pace faster than if we look in the rearview mirror. So we see plenty of opportunity to build on the momentum and to further grow the business. And let me touch a little bit on the areas I think we can do so. Another sort of, I guess there is some opportunity relative to some tailwinds. By that, I would say capitals remain fairly limited, and capitals also remain very disciplined. We still expect rate to be above trend across most of the lines, more so in the specialty than the casualty. And we think positive conditions will continue in the near to intermediate term. But as I said, not one size fits all, and I think it's about being able to be nimble and adapt in the respective lines where we see that opportunity. I think being able to provide clarity of risk appetite enables us to differentiate by line. And I think we've done that successfully over the last year, and we'll continue to lean into that as we move forward into 24. Where we've been able to capitalize on some of the lines with strong rate growth, marine, credit and surety, mortgage, and some others. And then we've also seen a lot of movement in terms and conditions. And so for us, it's really making sure that we strike the right risk reward balance. So if I think about areas of opportunity, agriculture, there's really 4 key main markets there. We'll continue to be meaningful in those markets, but a lot of it depends on, the government obviously is quite active in some of the structures of those transactions. So it's about making sure you're bringing value and being meaningful in your share size. But we do see the opportunity to continue to expand there, as well as evaluate opportunities more geographically. Credit and surety. We've made an investment in structured credit and political risk. And so you'll see us looking to expand the product set there, as well as trying to do a bit more geographically. And on the marine side, we brought in a new head of marine over the last 6 months. And there we're looking to be complementary to our insurance business because we're also a market on that side. But we really see room to move there with stronger rate environment, stronger wording, and certainly transactions getting more back to what a true marine policy should cover, and not sort of broad, extensive language like in the past. So 4 main sort of initiatives for us that are more thematic would be continuing to reduce that net volatility, optimizing the specialty lines, creating better balance in our book, where over the cycle, specialty becomes a bigger piece, and depending on the casualty market, might become a smaller piece of the book. Pursuing that selective growth. One area also we've leaned into is cyber. We used to write cyber. We have a large portfolio on our insurance side, but within the reinsurance team, we predominantly wrote it as a strategic accommodation to some of our key clients. But we actually see the market quite strong on the re side, and therefore this year have been growing more in that space and expect that to continue. However, very tight limits management, high risk selection, geographical diversification, and cap treaties which gives us comfort. But I think it's really about being able to flex quickly. Cycle management is something we talk about, but not everyone does it effectively. So that means for us growing where it makes sense, making sure we've got those leading indicators, not just rear view mirror indicators, and that we're able to sort of maximize the opportunities that we have with the clients that, you know, we want to grow shares with in terms of the transactions we already have with them.
Absolutely. And some very sort of challenging, but definitely room for opportunity lines that you mentioned: cyber, you know, surety, all these things affected by the larger environmental conditions that, you know, climate change, inflation, those things. So it sounds like you're really focused on some interesting some interesting opportunities there.
Yeah, no, I mean, absolutely, Sandy. And it, you know, I think what's important is to stay true to your core and your purpose. And I think that's what the team is doing, is really specialist focus, being relevant and meaningful, differentiating ourselves through that solutions mindset, through being active and listening, being active to what's keeping them up at night and how we can try to find, you know, ways in which to solve even the problems of the future we don't know about today.
Yeah, and those are certainly areas where I would imagine you hear a lot of need from the insured. In thinking about how things are affecting the insured these days, we do hear a lot from brokers and from carriers about the high premiums, the reinsurance, you know, being higher, the attachment points being different in some of these more challenging lines. So talk to us a little, and then sort of how that sort of trickles down to the insured. So talk to us from the reinsurance point of view. Discuss this trend and just how you all are seeing it, and sort of, you know, let's hear that perspective so we can get a complete view of what's really happening there.
So ultimately, the reinsurance market needs to correct. You know, the cost of capital has eroded over the prior 5 years, and 1 year of improvement isn't going to make up for that. I was pleased to hear at the Monte Carlo rendezvous that reinsurers are, you know, staying firm on their resolve that the hard market needs to remain strong. And it's not just about getting more rate, but it's also about holding on to that traction that's been achieved with terms and conditions, ceding commission reductions, structure changes. You mentioned attachment points. It is putting more risk on the insurers, and some of them are looking for innovative ways to solve for that. But, you know, I think we weren't charging the appropriate price to pay for risks in that frequency exposure. And that's really what the market is correcting for. So I do think 2023 is a transition year, and that there will be a continuation of improving conditions. That rebalancing of risk sharing and rate adequacy needs to continue, because risk adequate returns are needed across the industry in order to stay in business. And while a lot of the market commentary has been more pronounced on property, you know, where the market is certainly hardest it's been in many, many years, you know, we are obviously seeing that trend continue across many of the lines of business, including in the long tail space, although not, as I said, exactly the same, certainly differentiated by line and by cedant. I think making sure you differentiate the performance of your cedants, as well as how they're contemplating some of these headwinds in the way they price their business and in the way they reserve for risk, is absolutely critical. But we can't, you know, as an industry and as Axis Re, afford to become complacent. The work isn't done, and the loss trends aren't showing signs of slowing. So, you know, we ultimately believe the focus of our business on the specialist space, you know, allows us to be well positioned for profitable growth across the cycle. And we want to be a sustainable market for our cedants going forward.
And it is interesting, you know, last fall, all you heard about, you know, post Monte Carlo was that property reinsurance conversation. So it'll be interesting to see, you know, what the conversations are like this fall and then going into next year, and if they sort of reflect, you know, sort of the comments that you're saying, and the need for this to make sure that there is solvency all around.
No, I mean, I would say there was less property talk at Monte Carlo and there was more casualty talk,
Interesting.
about, your pricing for some of the unknowns. And, you're pricing a long tail line where there's not much certainty. And so, I think ensuring that the clients, the cedents are able to articulate how they're improving the limits management, the risk selection, the balance in their books, as well as how they're pricing for, inflation and these risks is critically important for us as a reinsurer to be able to gain confidence in that portfolio and be able to have more confidence in our pricing, so let's see how the conversation continues. But casualty is certainly more of the dialogue this year.
Yes, we'll have to be looking out for that as we go into some of these fall meetings. So one more sort of larger question for you. As we continue to see this challenging risk, as we've been talking about climate, cyber, some of the systemic risk that we can't really pinpoint, but it's definitely there. How can the industry prepare to better serve clients with, new innovations? Obviously talent comes in here. Talk to us a little bit about AXIS Re's approach to that.
So, within AXIS Re, I've referenced we're very solutions orientated in how we look at specialty business and how we underwrite our business. So amidst these challenges, as I said, it's about tailoring solutions, not just pushing a product in the chosen lines and to address those evolving needs. We've tried to focus on listening so we can better understand the problem our clients are individually trying to solve for. Is it earnings volatility? Is it capital relief? Is it addressing some of those frequency loss activity layers? We can better serve our clients through deep product expertise and responsive client service, which is why, being focused in our approach, I think has and hopefully will continue to serve us well. So let me look at it from a different lens. I think, one interesting aspect of this discussion and part of what we grapple with is how emerging technologies are addressing systemic risks. They're very connected. So for example, AXIS recently invested in future-proof technologies, which is a provider of innovative climate risk underwriting solutions as part of our commitment to support the transition to a low carbon economy. But then when you think about it, new AI technologies are also a driver of emerging risks. So once information, for example, is fed into a chatbot, it joins the vast volume of data that AI can draw for future queries. And so then that technology could pose risks with improper use and lead to data breaches, amongst other things. So, I think it's important to strike the right balance between, allowing people to innovate and trying to, think about what's coming next and how to solve it. But at the same time, making sure there's appropriate sort of guardrails in place and controls. I think as an industry, these tools present exposure to a new form of cyber attacks, which we need to fully understand, prepare for, price adequately for, in order to provide coverage. And, what I think about is systemic risks, evolving client needs, they all highlight the importance of innovation, and they also highlight the purpose of our industry and our business. Because we have a responsibility to be proactive and to be ahead of what's coming next, to find ways to address the plethora of uninsurable risks, but also to play a role in closing the protection gap. So I think looking in the rearview mirror for trends won't solve the challenges ahead. It's really about investing in expertise for the future. Like, for example, some roles are requiring different skills than what we might have hired for in the past. Underwriters today need to be able to leverage different data sources and technology and systems to be able to really properly risk select, properly price. And that's maybe a different mindset and a different skill set than the past. It won't take away from the importance of relationships. This will always be a relationship business. And that element of building trust and negotiating and coming to mutual solutions will be key. But we've got to be able to manage the vast data sources and analytics and leverage them effectively. And I also think it's about adapting swiftly to change, because the pace of change in the last 10 years has been nothing like I've experienced in the first 20 years of my career. And so the best and most successful reinsurers will be those, in my opinion, that evolve the quickest, are nimble in their ability to respond, and that are able to differentiate themselves in how they respond to these risks, to the industry as a whole, and in particular to their engagement with clients and brokers.
Great points there, and touching on sort of the risk of new innovation along with what it can achieve for us. So I think, looking at both of those together and thinking that is really a great way to look at it and prepare for the future as everyone tries to innovate and experiment with what's out there, which we see all the time.
No, I agree, Sandy.
Well, thank you so much for joining me. This has been great. It's been a great insights into the reinsurance world and what's going on over at Axis Re as you all continue this evolution of the company, and congratulations on your first year in.
Thanks, Sandy. Appreciate your time, and thanks for the insightful and thoughtful questions.
That was Ann Ha, CEO of Axis Re. For more Leaders Edge podcasts, go to leadersedge.com or subscribe at Spotify, Apple Podcasts, and SoundCloud.